Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Friday. It's been a bit of a week. We have 1, 2, 3, 4, 5, 6 daily candles in a row. It's been the pain train for the last week. Starting on Friday last week, that's when it really started to kick in. Friday's candle last week, I said that's the first real claw by the bears where it feels like it's taking on a mind of its own and possibly having some follow through, and it did. We are down from top to bottom about 5%. I don't think this is a big deal at all. I think there's more pain ahead. I just want to get people prepared. I did this in TradingView. I did this in some of my other sessions. I talked about this with a lot of my services. I'm looking at these big technical levels. It's pretty simple. If you are getting ready to kind of time this move, I'm not crazy bullish right now. I think there's discounts offered up, which is great. I think having buying power at the ready is great. Let me see here. If I were to do, got some buying power left, but not as much as I would like. Let me check something here. So that hedge is looking good for about $400 profit. That goes out to next Friday. Let me see with this one. What's my max profit here? $7 max profit. So 7 times 5 is, oops. Whole trade cost me $7. So 7 times 50. I'm actually somehow in more profit. It's showing more profit than what's my max. I mean, that's cool. Let me see if I can just close this thing down. So I'm up 107%. I do have a profit trap on this one. We're not even close to the profit trap, though. Let me see if I can just close this thing down for a win. Close. So can I close this thing out at 45 cents? I don't want to close it at 75 or 80. Let me see if I can close this thing out for 50 cents. 45 or 50 cents? Nope. 50 cents. Trade closes at spread. Hmm. 55 not filling. 60 cents. Okay, I guess it doesn't want to close. Never mind. What else? Copper. This hedge is still working out pretty nicely. Got the 61.75 by 57. That's up around $500. I'm gonna let this thing work out. That's out till April, so I got time in that trade. What else? IBIT with some shares. That's fine. MicroStrategy, fractional, bull call spread. NVIDIA ratio spread. That's out to April. Pfizer, the stock that can never go anywhere. It's like trading the euro pound. You want to trade the euro pound in a stock version? Just trade the Pfizer stock. Palantir, that's a ratio spread. Max profit's $1.40. I'm going to get some buying power back. I'm going to take this one down. Let's go 107. 34 cents. I mean, sheesh. Got to wait another 48 days. Pulled in $1.41. What's it trading for? Okay, I can get over $1 on this. I'm just going to take the profit. 35. 34 got filled. All right, I'm going to get some buying power back with Palantir. So I'm going to clean up some of my ratio spreads and look at some fresh trades. Equal weighted is fine. Fine. SLV, okay. SPX. Just took profit on SPX today. Got some waterfall trades in. Those are going to be out to March and April. Those trades are good. SPY. This trade is a I've got mostly max profit in this one here. This is a 550 by 545 by 520. Max profit's about 209 with a profit trap, but profit trap's got to be below 550, which I don't think we're necessarily going to get. So I'm just going to take the profit, get some buying power back here. So let me see if I can close this 209 down for like 20 or 30 cents. 31 cents. Let me see if I can get it for 30 cents. Be generous. 32 cents. 33 cents. Ask price is 34. 33 cents. Got some buying power back there. Nice. Okay. So I'm closing up. That was a 550, 545, and 520. That was a SPY trade. Excuse me. Closed out the ratio spread on Palantir. Okay. So I'm going to keep an eye on that trade. Tesla, partial shares, XSP, lots of trades in XSP. These are good though. These are profit traps. I'm going to have to wait a little bit longer on some of these trades. This is fine, but I got some good buying power back. I'm doing that for a reason. Let me see if I can find in SPY. I'm just doing some trade management today. I do have a hard stop at 11 o'clock, team. I have a webinar coming up at 11. But I want to just take a look at a couple things here. So the 550, 545, what expiration was that? That SPY trade was a March 21st. So that was a March 21st expiration. My 550 by 545 by 520. Get some buying power back on that one. Close for 32 cents, hopefully. 32 cents got filled. Excellent. Get some buying power. The 550, 545, 520. Close, 32 cents. Filled. Very nice. Okay, so I'm getting some pretty serious buying power back because that was a naked put. So a naked put at 520. I'm going to get some buying power back. 1, 2, 3. Close, 32 cents. There we go. This one didn't have it. Those are fine. Okay, March 21st, closing 31 cents. Maybe I get an extra penny. Nope. Come on. 32 cents. All right, close at 33. 1, 2, 3. 32 cents. Come on, guys. 33. Okay. All right, I'm just doing some trade management right here, and let me get into some levels. Buying power I normally use. I still have about a third of my account in cash right now. About a third of my account in cash. I think that's the most important thing is having cash at the ready. Tongue in cheek compared myself to Buffett yesterday. Obviously, I'm not doing that in real life. But Berkshire Hathaway is sitting about 18% cash right now, like one of the highest percentages on record. And I'm sitting about 30% cash. So I'm doing that because I see the same thing. It's like, I think there's better opportunities ahead. I think there's a good way to rotate. I think there's a good way to play the indexes. My goal this year is to eliminate a lot of the volatility. So anyway, buying power, I don't like to tie up more than probably 80% of my max buying power. And a lot of it is like small little trades that are going to risk, 0.25%. A lot of risks are under 1%. And I just trade actively, right? I think that's a good way to kind of survive and spread it out so you're not doing anything crazy and stupid. March 21st, 1, 2, 3, close, 33, filled. Uh, 580. That was a hedge. I'm going to take this one off the table. That's a 111, 1, 2, 3. So this is a buy, sell, sell. This should be closing out for a Can I close this for a credit? Maybe go for like a 1 cent debit maybe? All right. So that was a buy. Okay, now I got some buying power back. Good. So $1.30, close it out for $1.30. I'll take the winner there on the SPY. Okay, very nice. This one just has shares. This one. This one. There's my March 21st. I got to dissect this one. I've got a buy, sell, and a sell, sell. That one should be okay for profit. This one is March 21st. Yep. So I'm gonna group these together really quickly. This is gonna be a 1111. So group this as a 1111. Okay, and then this other one for the March 21st expiration. That's a profit trap. That's a spread. There's another 111 trade. There we go. Helps me organize this a little bit. And then June 20th, those are out of the money credit spread. Here's a 1111. This one's actually looking pretty good. This is a hedge, which is up around $900. And this is a, see what I can close this one down for. So March 31st, I have 7.28. Hang on a second. 7.28 plus 5.73 minus 12.35 minus 10.50. That can't be right. 605, 590. That's just a hedge by itself. Oh, these, okay, never mind. 605 by 5, these are hedges. Okay, so 605 by 585, 590 by 570. Got it. Got it. Okay, so these are net profitable. Let me see what this adds up to be. So I got 963 in profit, minus 62, minus 404, plus 168. I'm up $665 in that position. I'm going to close this one down. Yep. Let's see if I can get out of here for 1650. $16.45. Okay, so that trade cost me like $9, and I got out for $16.45. So $16.45 minus 9. 1645 minus 900. Made about 700 bucks on that trade. Good. And also get some buying power back. Okay, so now I just have a credit spread that's way the heck down here. And then my 111 trades, which are looking good for profit overall. I'll hang on to those. Okay, so nice little broad stroke of some buying power, which is what I was looking at last night. Taking some wins, closing those out. While I've got the next 25 minutes before I have to go, let's talk about some technical levels here. SPY crossing 58.95. So we poked that level. That was actually my trade from yesterday. I was trying to get out of a broken wing butterfly yesterday for a profit, ended up taking a loss, closed out some hedges for some wins. But anyway, it is fine. Just got a new computer trying to set up Discord, but not see your alerts. Here's my Discord channel. I'll share this it's going to be a 1 hour invite link. So invite people, edit link. This is good for the next hour. Chris Pulver trading Discord. Yep. So there's my Discord, YouTube channel, youtube.com/Chris Pulver. If you're in Pulver Alerts, that is with A1 Trading. So you want to follow the A1 Trading community Discord. Okay, so this is what I want to talk about. I mentioned this yesterday afternoon in my final hour session on YouTube. Look, all of these are the same. Okay, I'm going to bring up this little bar count workspace that I have, and it's pretty simple. I just coded this indicator with a little AI, and it just gives me a straight up bar count on the 200 moving average. Okay. Now, is this all I need? Well, it's a pretty simple combination because there's two levels I'm watching. Let me change this to, see if I can edit this. 200 EMA, I'll make it red. Okay. So this is my 200 moving average. This is all I'm paying attention to, but then I'm going to put in a trend line connecting the dots from April to August. Right? So just hear me out. If there's more pain ahead, which I think that there is, simply because this is a nice bar count. We've already started this drop. So I think anything right now is probably a bit of a sell trade. I don't know this for a fact. Obviously, the market could come up and find the same highs again, and we deal with all this nonsense. This would be a bigger concern for me, is that we just stay, if we stay above this moving average for much, much longer, my concern is that when this thing breaks back down, it's going to be a bear market. That's my biggest concern. What I'd almost rather see is this. I'd rather see that these 6 days we've had of selling pressure are going to continue to mount additional selling pressure, and it's in this window between the 200 moving average and the connected lows from April support to August support to this being future support. Does that make sense? So roughly that is 5,700 on the SPX down to about 5,500. It's a 200-point area, and I know that's not perfectly precise, but I would say that if I'm looking at a bottom to form, or at least an area to get positioned and start to take some buy trades again and start to look long positioning with my option trades, it's that window that I'm going to be watching. Okay? So I will do this. I'll say 5,700 to 5,500. It's going to be that area. And I'll box this in. So there's my area right there. Right? I'm going to take a screenshot of this because I want to have this for my little list as well. So we're talking about this end of February, but that's a nice little level. XSP, same thing. Connect my April to August low, and I've got a 570. Okay, 570 down to about 550. With a box to go with it. Okay, take another screenshot. Does that mean that I need to be full on bearish going into that? No, I mean, I've been bearish this entire stretch. Once we hit all-time highs, I put on a hedge. Put in all-time highs, I put in a hedge. Those hedges are out to the end of March and into the end of April. Those hedges are still going to play out, and I'm still holding them. All right. SPY. Same thing here. Connect your April to August lows. It's going to be very similar to the XSP, which is going to be this window right in here. So it's about a 570 to 550 window. Okay, RSP is a little bit different. RSP doesn't have the same, it still has a bar count. Let me check RSP here. We actually tapped the 200 moving average back here in January of 2025. So my wonder on RSP is if we go high, low, lower, high, lower, low, do we start scooping up some RSP equal weight, allow this market to broaden, try to get back to these highs again, while the 490 stocks in the S&P can outperform as opposed to the Mag 7. Big rotation out of the top 10 stocks, big rotation out of Mag 7. That was pretty apparent yesterday. If you looked at the heat map from yesterday, right? This was, I mean, there were stocks that were green yesterday. It obviously wasn't all red, but your biggest rotation is just look at this: semiconductors trash, Nvidia, Mag 7. I mean, it's no longer a $3 trillion company. It shed, I don't know how many hundreds of billions of dollars in market cap, but that's scary stuff, right? And then your Mag 7, just big rotation out of them. You got some other stuff hanging in there, but that's what rotation looks like. Okay. All right, SPY, let me take a screenshot there. I have SPX, XSP. Take a screenshot here of the SPY. Where the heck did my workspace go? There it is, SPY. Take a screenshot there. Okay, even on the Nasdaq. Nasdaq is almost at the 200 moving average, but just in case we go a little bit lower, it is certainly known to be more volatile than the S&P. I'm going to say the 490 down to like 450. That's a big area. 490 down to 450, and I would almost be willing to say wait longer on Nasdaq than you would on S&P or Dow. And the reason why is because tech, with this rotation out of growth, out of momentum, into more defensives, lower beta, lower volatility, I think the Nasdaq could have a bit more of a correction. Now, it could be totally wrong, right? Like this thing could just bounce right off the 200 moving average and it's right back up to the highs, and that was your dip. Okay, so I might take a nibble here, might. But I think if there's more pain ahead and the S&P still has to find the 200 moving average, there's clearly more distance to find the 200 moving average here, which means more pain in the S&P, which means more pain on the Nasdaq, right? So this is a wider zone, and I would say if I had my pick, that if we're down through this 200 moving average, then I'm going to start taking some nibbles. I don't have to be perfectly precise, but I'd say like between the 470 and 450 area, I'd like to get long on the Nasdaq rather than just bouncing off the 200 moving average. I think it's a little bit safer play to let the tech side like flush out a little bit more, right? And that's a pretty healthy correction. If we go from high to low here, that's a 16 to 70% correction. 16 to 17% correction. That's a healthy correction on Nasdaq, if you ask me. Okay. All right. Take a screenshot of that. All it is a 200 moving average. It's 200 moving average, 200 exponential moving average. That's it. Okay. Dow. Same thing here. Let's connect these lows. Here is your April sell-off, April to August. Boom. Dow's a little bit more in the tighter space here, but that'd be my window from, let's say, like 420 down to 400. 420 to 400. There. Right. Russell. Russell is already through the 200 moving average. IWD is the top thousands. I'm going to look to see how this one plays out. If it comes back down to revisit lows here, if it revisits lows, maybe I like some IWD. This has actually been outperforming the index. Is up like 4% for the year and hanging in there. IWY, I don't like as much because this is growth. I'm trying to move out of growth right now, at least for the time being. But also if it came in like this as an ETF is pretty cheap. So maybe just doing like a cash secured put, trying to get back below like I don't know. I don't know if I want to do a leap on this or not. The market's going to have to embrace this AI push again if IWY is going to start growing. If IWY is going to rally, it's going to be, the AI trade is back on and resuming and things are looking good. But this might be something I just want to stay the heck out of. IWX and IWD, that's value. That's value. I like this a lot more. So if IWX is top 200 growth for the Russell, if this is a range trade, if it comes up here, I mean, I'd like to see it maybe fall down to support again, but a range trade is possible. Otherwise, it's dirt cheap. I mean, honestly, if I just thought small cap value can improve or outperform, then I mean, the ETF. I mean, this ETF is only $83 versus like hundreds of dollars like you see on most. Okay, all right. Does that make sense? So, just a quick snapshot of where I'm watching the major indexes. Okay, connect the April and August lows, and then looking at a 200 exponential moving average. It's that window that I'm going to start taking some nibbles, being bullish with options. A lot of my options probably going out 30, 40, 60 days, maybe going out 30, 60, 90 days. I'm really not overly excited from September. I'd say 9 of 2025 into December of 2025. I'm not overly optimistic in that window. So if we have a bounce here, I'm going to try to make as much money as I can before September. I don't know. That's my mentality for this year. My high for the year was about 195K. I have watched probably 90K of that go away in the last like 6 or 7 days, which doesn't necessarily mean a bad thing, but it's right there. 190,000. I mean, I'm up 100 grand. I'm still off to a decent start for the year, but man, I'm glad I padded those gains early in to give myself a little bit of resiliency, and now I will see where I'm at. So anyway, long story short is I want to be positioned for some success. I think the timing of this is something I need to watch, and this is I'm going to position for it. So if we see the opportunities here and we come back up to fight to those highs, I'm going to try to make as much money as I can in that environment, because once these highs are hit again, I don't know if we just go higher. I mean, this might be a dip back to the highs. The market clings to like a 0 to 5% gain for the year. But if we just chop around and have like this look, something tells me that 2026 looks a little bit worse, So I'm not going to get super greedy. I might join the Buffett band camp and just wait for better opportunities. But I think at least for this first real drop, before inflation is truly sticky, before the Fed takes any action in monetary policy, and maybe we get the initial Trump policies, which is just heavy in tariffs and heavy in uncertainty. We start to see there's something implemented with, and also heavy in layoffs. By the way, I mean we're cutting jobs left and right. Like federal workers are getting laid off like crazy. In the background, tech's been laying off people as well, and it's starting to trickle into other sectors. But see what I'm saying? Like there's a lot of stuff setting up for maybe some fragility and some uncertainty in the next, let's say, 6 to 12 months. And I don't want to be left holding the bag if we're going to have a true like 20, 30, 40% correction in the next 1 or 2 years. Another thing that I would say, this is like worst case scenario, but I preface this for some clients this week, is let's say that we don't stop. Okay, let's say we don't stop at this 200 or this box, right? This is my area that I'm watching. Let's say we don't stop here. Well, this is another thing you can put on your chart. Just have it on your radar. And you can remember that we talked about it. This is a 5-period yearly average. 5-period yearly average. And if we can survive in this area for 2025, I don't think we go through 2026 without finding this yearly average. And that's where things are going to get a lot worse, because now we're talking corrections in the 20%. Now from these highs, you're talking a correction of around 23%. That as an index is going to be a lot of pain, right? I mean, that would be classified as a bear market like we had back in 2022. It's, not to the extremes of great financial crisis like we had in 2008, but it's not great, So I would be optimistic that this is a spot that the market can bounce. Okay. But going into 2026, I think that this gets hit. And this is a moving average that's not going to move very fast. So this is always going to be trailing current prices by about 20%. So if we're back up near these highs, this is about a 20% correction away. And that is going to feel like crap. So, make sense? All right. That's where I'm at. That's all the major indexes. That is SPX. That is XSP. That is SPY. Obviously, those are the same. Those are representing the same thing. That's S&P 500. Index. That's an index. That's the micro version of that. And then you have the SPY. Then you have the QQQ. Then you have the DIA. I'm not putting Russell in because the Russell's already pulled back. I'm going to try to figure out whether I want to trade Russell growth or Russell value, probably Russell value. And then NDX would be very similar to the QQQ. So watching, connect to April, connect to August, and then put in your box between that support as well as that 200 moving average. And that's the window I'd be watching for tech. The smart play for me this year is probably not a lot of QQQ exposure. Mostly SPY, DIA, rotating into RSP, QQQE, trying to keep more equal weight, take down the volatility as much as I can. Okay, all right, I've got a few minutes left. I'm going to go here in about 7 or 8 minutes. Currency strength on the day. Let's go oil, gold, silver, Bitcoin, stuff like that. Here's currency strength today. We got Japanese yen softer, Aussie New Zealand softer, Swiss softer. The dollar's up here with the pound, the euro, and the CAD. Japanese yen, another crazy volatile day, up to the top where it was the strongest currency. Now it's the weakest. Welcome to the world of the Japanese yen. Currency pair-wise, dollar index catching a bid for the last couple of days. I said watch this 106 to 105.50 zone. It came down to 106.15. Yields. Okay, 10-year yields are down to 4.25. That's down about 55 basis points from these highs. That's kind of nice. It'd be lovely to see if we have more pain ahead in the markets. I'd love to see this 10-year yield rip down a little bit farther. It'd be, I'm saying this selfishly because I've got a house to close on in about 45 days, and I'd like this to be as low as possible. I'd like to see that translate into my 30-year mortgage for whatever that price looks like. Hopefully we're closing mid sixes or low sixes, and I can buy it down. Maybe sub 6 would be kind of nice. We'll see. But anyway, I hope this continues to slide a little bit lower. If we get a little bit stickier here on the 10-year, that's not going to be a huge surprise. I'll just throw this out there. If you're lucky, you're going to see a range on the 10-year. Okay. Where things get really painful is if we start to see another uptrend. Okay. Higher highs and higher lows, higher highs and higher lows. And that means that the Fed is completely losing control of inflation and restrictive monetary policy. And the markets are telling, the market's telling us one thing and the Fed is preaching another story. So I don't know how that plays out, but I just hope for right now in the interim that we're going to go a little bit lower as the pain is happening. And let's see if we can flush down to those levels I just noted. And that hopefully brings the 10-year down a little bit softer. So if we can come back down to these levels, that'd be pretty nice. But I don't think this is necessarily going too much lower than where we had these lows before. So, and to put this in reference with the 30-year mortgage, when we were here at 3.6% on the 10-year yield, 6.05 was the 30-year mortgage. Isn't that crazy? Like 250 basis points different between where the 10-year yield is at relative to your actual mortgage. It's like, and the Fed funds rate, meanwhile, when they cut it down here, the Fed funds rate is now down to 4.25 and 4.5. And this is up to 7% mortgage rates. This is down to 6% mortgage rates, and this thing is moving 100 basis points. So it's kind of crazy how it all like mathematically plays out. But a lot of the financing, auto loans, refi, anything for business, a lot of that stuff is coming due later this year and into 2026. If people are wanting to grab money and people that have raised since COVID, this is going to be where they're looking to hold their hand out again and re-up for raises. If they're going to raise at 4.5%, that's a lot different than raising at 0%, raising at 0.25%, raising at free money essentially, right? It's a lot harder to cover a 5% arbitrage than it is cover a 0.25% arbitrage. All right, a couple things on currencies, then we'll go. So let's go dollar, gold, silver. Gold selling off, which is expected. We're pulling back to some decent moving averages. Here's crossing the 21. I like the 50 and 100. Again, I take some nibbles on gold. previous resistance here, maybe an aggressive bounce. We'll see if gold is bid immediately, then we could bounce past resistance becoming support. I'd watch for that level. I'm going to wait a little bit longer simply because it's the same thing as I mentioned earlier. Look at this bar count on gold. Okay, there's my bar count, 355 bars. If I connect, and this is going to be interesting, if I connect some of these lows, okay, connect the lows somewhere in this window. So there's a hand-drawn trend line just connecting the dots. Connect the lows, connect the lows. This has been well above the 200 moving average for a while. This is the last time that we hit it. So there's your 355 bars. And so between this 200 and this outer trend line, that's where I would take some bites on gold. Right? And gold may not pull back that much, but I hope that it does. I hope that it does for really, like, this would be like longer term positioning. I would love to see gold at 6 to 12 months out just get back to these all-time highs, but have a respectable pullback. If gold can pull back here, maybe around 12 to 15%, yes, please. Because if I get that pullback, let's say we pull back towards this 200 moving average, and then we do end up making the run towards 3,000, that's a 15% rally. I would take a 15% rally in anything, let alone gold, which I think is a good safe haven. Having 10, 15, 20% portfolio allocation is good. I'm good with that. Okay, gold, silver. I still like silver quite a bit. Pretty well supported at 29, extremely well supported at 26. I want to see if we make some higher highs on this. Bitcoin's certainly seen better days. A lot of volatility here. Long wick to the south. Maybe this was the test and buying opportunity around that 75K mark. Maybe the pain's not done yet. I don't know. MicroStrategy as a proxy, holding green around this 250 handle. So I've got my break even on MicroStrategy around 263, covered call around 310. Bitcoin gets a bit of a rally. That's good. I'll get this thing called away. I put in some extra trades on IBIT this week. Some income trades down in the low 40s. We're sitting around the 200 moving average, previous resistance. So just keep an eye on this. I think technically, Bitcoin has certainly been facing bigger drawdowns in the past, but I just think it's a larger instrument. It's more accepted. There's certainly more order flows into it. This became one of the fastest growing ETFs ever. GLD took like 8 years to get to, I don't even know what it was, $100 billion or something, and it took Bitcoin. I could be wrong. I mean, what is the market cap here? Does it show market cap? No. I don't remember if it was like 100 billion or a trillion. Doesn't matter. Either way, like whatever GLD took 8 years, and it took IBIT less than 1 year. So just like it's a pretty serious asset right now, but it's not going to come without having some serious volatility. Okay. All right. Currency pairs. I'm just going to do a couple. I literally have to leave in 1 minute. I still like my Swiss crosses, even though they are watching a lot of these gains. Just go back to it's a reset. I like Aussie Swiss here at the bottoms. Okay. And I'm willing to dollar cost average into flash crash lows. I think that's a pretty good spot. If we go to CAD Swiss, same thing, investing at the lows. Investing at the lows, at least taking it back to a range level. So that's profit target. If we go higher than that, then it's a swing trade to symmetry. But I still like the trade. I'm just sitting and collecting a little bit of positive swap. Euro Swiss, still holding long on this one. Pound Swiss, fine. New Zealand Swiss, similar to Aussie Swiss. Tapping these fresh lows, kind of reallocating at lows and flash crash lows. Dollar Swiss, I'd love to see this thing pull back even deeper. I don't know if it's going to. But I'll wait. If we pull back in like 85 or 84, I'm buying more dollar Swiss. Dollar CAD, does anybody care? I'm out of it. This could be a nice swing trade if anybody's interested. I hated the fact that we did that swing, but this could be left tip, center tip, right tip. We could have a swing trade back down to rebalance. But I don't trust this dollar CAD at all. This trade that I took that was long to 145. I'm super happy I got that trade and it worked out. I loaded up a bunch of positions and stacked them up to that target level. From that point, I'm out of it. I don't really care what this thing does. If we pull back to this area, this is nice resistance. I think this becomes high, low, lower, high, lower, low support, and I think the dollar CAD probably heads higher. I wouldn't be surprised. I mean, if we look at the state of the economy, I think that Canada is probably in a lot rougher shape than the U.S. So that's that. Pound dollar. All right, I got to bounce actually. It's 11 o'clock. So jump into another webinar. Pound dollar, if we break this trend line, looking to go on the right hand side. A lot of this is just dollar index related. So, all right, hard stop at 11. I got to bounce. Thanks for being with us today. Happy Friday, and have a great weekend. Let's come back and grind this out for the month of March. All right, thanks everybody. See you.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.